It's time to answer this question, I think, once and for all, to give you peace of mind. Are altcoins genuinely doomed for this cycle? Is Bitcoin and Ethereum going to take the limelight, and are altcoins not really going to perform as we expected to? And I think this is a very important topic to touch on because, as we'll see in a moment, I've got two videos from two different influencers talking about some of the reasons why they think that altcoins won't do very well. I'm going to be here to both support and deny some of their claims, and we're going to come to that final decision once and for all. Now, do not forget, guys, if you find yourself enjoying today's video, hit that like button, and while you're down there, subscribe as well, because videos like this are so important on your journey, especially to financial freedom. I am here to help in the most non-financial way possible, so make sure you do yourself a favor and hit those two buttons right now. Thank you very much. And briefly, I'd like to thank today's video sponsor, which is BlockDAG, for supporting the channel, allowing me to continue bringing you guys daily crypto content. So if you want to check out BlockDAG, what they are and who they service, check out the link in the description. Now, there's a lot to cover today, so I'm only going to really try to gloss over some of the main points made by these two influencers, and also, again, see how my personal take is, basically, so you can come to that decision. Now, I do want to say, first of all, this right here is pretty much the altcoin buy indicator, or the market buy indicator in general. In this grayish color, we can see this is Bitcoin's price, and this greenish color represents the altcoins, okay? Altcoin dominance, altcoin total 3 market cap. And every single time, according to the indicator, okay, either of these two sort of asset classes fall beneath or around the green line, it's a great time to buy, right? We can see the last cycle right here. If you bought altcoins down here near the green line, you would have made some pretty good gains, okay? That was right before the cycle started. Likewise, every single one of these dips actually was pretty much followed by a pretty momentous upswing, okay? Now, again, this is the same for Bitcoin as well. Bitcoin down here, you can see the price fell beneath the green line. And again, buying all down here, you would have scored yourself some pretty high multiples. And in this cycle, again, the same thing happened. Bitcoin's price was close to the green line. Buying then would have been an excellent time. Likewise with altcoins down here as well. But as you can see, we've never fallen beneath the green line in the last 5 or so years for altcoins. What a great time, in my personal opinion, to look to dollar cost average. Again, a non-financial advice. This is one of many indicators out there, but it hasn't failed us before. So again, I think that we are in for a pretty big alt season in general to begin with. Now, I also want to take your attention to the bullrun cheat sheet, guys. If you want the bullrun cheat sheet and all the amazing features involved with it, as well as the exit calculator, you know what to do. Link in the description. Join to the private community. We'll have individual links here very, very soon. But a lot of these altcoins, what I want to point out here, are up against Bitcoin on the week. Okay, so right off the rip, I don't want to get into the weeds of it all, but versus Bitcoin, alts are starting to come back to life a little bit. Maybe too soon to call absolute, but again, once we start to see a lot of these tick over the 30-day, the month, it is again a good sign, and I believe it's only a matter of time before we break above the green line and alts start going crazy again. But that, of course, is dependent on the breakdown today. Now, the first influencer and breakdown was from Rand from Crypto Banter. He said, don't be fooled by this altcoin recovery proof. Now, he didn't necessarily say altcoins aren't going to do well at all. He was making the point that on this particular situation, on this day, the altcoins weren't recovering. And actually, he was correct, right? Altcoins came back down again. So I actually agree with Rand wholeheartedly in this entire video. Okay, he makes a lot of good points. And one of the key important points here is stablecoins. All right, the stablecoin market cap since about April 1st, the last 3 months or so, has only grown $11 billion in terms of size. And a key component of this is obviously USDT. USDT makes up most of the stablecoin market cap, I think about 60% or so, almost 70% at this point. And one thing that is important to notice is the market cap in this blue line is increasing, so the size of USDT is growing, but the dominance in here in this sort of candle chart is actually decreasing somewhat. Okay, so why are they growing apart? Well, the market cap is increasing, so of course it's growing in terms of people are looking to put in more USDT and hold stable coins, but respective to the rest of the market, which is its dominance, it's actually falling, of course, which means that it's not growing at enough of a rate to keep up with the growing size of the market, which of course is an indication that there isn't enough money flowing in to make it worthwhile. But you have to understand as well, guys, you can also buy a direct altcoin on an exchange without, moving into a stable coin per se. Okay, you can buy BTC, USD pairs without going into USDT or USDC and so on. But besides all that, this actually isn't really a negative indicator at all. We've actually seen this before. again, in the last cycle, this is what actually happened. We again saw that, it was up at a certain point, dominance was, and then it came down, exactly the same as what's happened right now, okay? And the market cap actually pulled off. And again, that's when we had the massive bull market. Again, it's because new money doesn't always instantly come directly into a stable coin before being injected. Yes, it does account for, a lot of it, but not all the time. And so this, I think, is an indication from the last cycle that this is part of the natural flow of a bull run. But again, I do agree with Ran. We don't want to see stable coins slowing down. We definitely want it to be picking up speed. But I think as of right now, given that most of us agree that the bull market should hopefully be, concluded by the next 12 to 18 months max, then this is following the natural progression of things. Again, way back in 2021, this right here started happening about 12 months out from the top of the cycle, maybe even 18 months out, okay? Now, the second video I want to touch on here is one by Miles. He actually said the number one reason why altcoins are effed this cycle, the honest truth. Now, again, he makes some pretty valid points, I must say, but I do disagree on a fair amount of the things he does say here. One thing he does touch on as well is the VC deal count and capital invested in the last cycle. We noticed that a lot of VCs were buying, these projects and in the early investment rounds, and it particularly sort of capped out towards the end, right? So we can see here, basically Q1, Q2, this is when Bitcoin was, by this black line over here, already starting to fall, okay? Bitcoin was pretty much financially done already, right? Into a bear market. And he makes a point, as he's about to say here, that a lot of these VCs actually ended up having to hold their positions because these projects weren't necessarily going to be launching at a time when the market is falling, okay? They had no real opportunity to. So they're launching over here and right now, which has left a lot of us to notice that the market is seeing a lot of bloody new altcoins, okay? We can see here in January to April, all right, we had about 500,000 or so new coins enter the market, okay? This is, again, April, so this is still a couple months old, 3 months old. But you see that Ran as well as Miles will point at the figure of 2.5 million tokens launching in 2024. But guys, we're only halfway through, actually just over halfway through 2024, which does mean that this is an estimation. Okay, 2.5 million tokens haven't been launched. There's probably been around 700,000 or so, again, accounting for the fact that April had about 500 or just under 500,000. So again, we're not talking about this is not set in stone, but again, the point he's trying to make here is that there are too many coins and too little money, again, going on Rand's point, and such little money invested in stable coins, again, that it can't keep up. The market can't keep up. But guys, I want to make the point here, right? You don't really find many people investing outside of the top 1,000 coins. You're gonna, after this, sort of level, you get into the real degen territory, the micro caps. The top 1,000 coins, guys, starts at about a 12 million market cap. All right, this is completely normal for a bull market, actually. And again, we haven't really seen the true kickoff of the bull run. This might end up being 50 million, I'm not too sure, by the end of the bull run, right? So you're not going to have a lot of people, beginners particularly, throwing their money into anything outside the top 1,000. And if they do, you don't have to be that intelligent of a human being. It's not rocket science to understand that you start treading in dangerous territory at this point in time, okay? A lot of that money from then on is pure degen speculation, and most of these markets at this point are manipulated, okay? So again, while we can look at these stats and look at the, in VCs and investors and why they, all these new coins popping off now, most of the people aren't even looking outside of the top 500, for goodness sake, okay? So the argument to be made of well, there's not enough money to go around this time, I completely disagree with. Okay, most of the money is targeted inside the even top 500, I even say top 200 or 300 altcoins. And at that, these are, again, projects from the last cycle that are deciding to launch now, because no project in their right mind will launch in a bear market. You're just going to have a crappy launch, and then you're going to have retail degens calling you a VC pump and dump, when in reality, that's not what happened at all in a bear market because the price came down straight away, okay? And so some of the points that they do make, and he makes here, is to go over these 5 steps, right? This is what he, claims is basically good for a project to look for and to locate. I want to break some of this down here momentarily, but it was funny because I've been talking about a very, very similar model to researching altcoins I founded over 12 months ago now. I'm calling the Pumpamental Plan narrative meme. This is any sort of announcements, right? So roadmap updates, marketing, tokenomics, distribution, investing, inflation, and the team. And it was just interesting to see that Miles had the exact same things to look at, basically, as well as the same order. Narrative, this is the meme, USP, differentiator, that's the meme. Tokenomics, right? He had pretty much everything apart from the team on here. So in the same order as well. I'm not saying he copied me. He definitely can come to the same conclusions in the same order, I'm sure of it. But I wanted to make the point because the fact that we agree on this, irrespective if you got the idea from me or not, I think a lot of us understand that most of the weight on these coins are focused towards the narrative and the meme, right? Where it's situated in a particular area and how unique it is. And this is ultimately what you have to look for in a project. One point he does make is to look for projects with low inflation, or I might actually play this clip here for you all to hear what he actually has to say, or projects that particularly don't have any unlocks during the time in which you plan to buy and then sell, right? The time you're in the actual trade, so to speak. So I'm going to play this, and then I'm actually going to disagree with him on this, okay? So it's very important you understand. I'm going to show you some examples, because this is a very big misconception in crypto that will actually pretty much allow you to make more money if you understand, and to avoid coins that might actually sound better than they actually are.
And point number 5, and this is a very important point to make for the traders and investors out there, is low inflation. So ideally, you have a token with relatively low inflation. Either that means you launch with a lot of the tokens circulating, or the time you take the trade to the time you exit the trade, to the time horizon window of a trading opportunity, there's low token inflation during that window. Let me use Ondo as an example. Ondo is extremely low float. A lot of tokens are going to be unlocking in 2025 and beyond. However, if your trading window for Ondo is the next 5 months, because the circulating supply is so low and because there's barely any inflation, that is likely to be a profitable trade, and it has been. That's pretty much why it's been pumping. Really low circulating supply and no supply pressure. Conversely, a lot of these new tokens that have been launching, they have a lot of supply pressure. They have the initial airdrops, so they dump, and then you have the private round unlocks, so they dump, and then the VC unlocks begin and they dump. VC unlocks aren't the only type of unlocks which affect the market. There are also advisory rounds, other sorts of...
So what he's saying is kind of correct, right? You have the unlocks of a token like Ondo, for example. Most people assume that when they see something like this, that this unlock event like he's talking about here is a negative thing. And to some degree, yes, this is why you have to understand the unlock itself, right? Where are these tokens being dispersed? Who is accessing the tokens? Where are they being sent, okay? And you have to understand it's not like traditional economies. You don't just print a whole bunch of money and therefore instantly dilutes the actual purchasing power of that currency itself, like we find with regular fiat currency, okay? Because the funds, when these tokens unlock, are actually going directly to specific entities. Most of these entities aren't even able to access the tokens because it has to go through things like you can see here with Ondo. Protocol development. This is a net positive thing. These tokens won't be sent straight away. They won't be delivered to anything. And if they are, they're going to be over the counter, which won't impact the price. Ecosystem growth, the exact same respect. That's things like grants to projects building on the Ondo ecosystem, all right? And community access, okay, that's obviously already out right now. The community access was like airdrops. Now, yes, you will find airdrops do, devalue the price of the project because this is actually people selling. The only way price ever is influenced from an unlock itself is if the people getting the unlocked tokens, okay, they sell on the open market. If they sell those tokens to me, if I buy those tokens for $1 million and they directly send them to me, that won't even impact the price. That's called an over-the-counter trade, okay? So the argument to be made that projects like Wormhole, for example, over here, are so-called not a good investment, or why projects like Ondo are only a good investment until this unlock happens, is a complete fallacy, because it matters who these people who have access to the tokens are, okay? Are they likely to sell? Now, he kind of alluded to, airdrop recipients, advisors, investors. These are called third parties. Third parties in a sense of they are likely or can sell the token whenever they want for a direct profit. Okay, so when we're looking at something like Wormhole over here, we're likely going to be selling somewhere around probably here, so month 12, okay, to around month 18. So somewhere along this line, we'll be selling, okay? So up until about month 12, actually until this unlock here, we really have nothing to worry about at all, apart from the community and launch. These entities, okay, are likely to sell, okay, the community and launch. If we scroll down, which is why it's important you read this, these are the people who are basically the early supporters who are paper hands. This is the airdrop recipients, essentially, right? They will definitely sell when there is the slightest news of a pump or a dump, okay? Very, very paper hands. Now, if we come back over here, who else also has access to the tokens? Ecosystem and incubation and the foundation treasury. They aren't going to be selling their tokens OTC. So up until here, while there's new tokens being unlocked over time, okay, steady increase. Even if there was inflation, it doesn't matter because it's not an economics problem, so to speak. It's also a protocol problem as well. Inflation by design, when they unlock tokens by inflation, okay, inflation is when the validators receive a reward for securing the network, for actually validating the blocks on a blockchain, so to speak, okay? Now, they get the tokens themselves, and sometimes the delegators as well, people like you and myself who put up your stake to these validators, and we receive tokens. Now, we're likely not going to be selling our tokens immediately as we get them in from the block reward, okay? We're going to be usually holding and hodling for the topside sell. So even inflation by design actually isn't a negative thing for a blockchain at all. Again, Bitcoin has inflation, okay, because as the blocks are created for Bitcoin, the block reward, right, when a miner mines a block, they get some Bitcoin as a reward. Sweet, cool, right? How many Bitcoin miners did you know selling their Bitcoin straight away after getting their block reward? None. They hodl it. They hold and they hold and they hold. They might sell on the top. They might hold forever. Who cares? Same thing for projects. Same thing for the people validating. Ask yourself, if you stake to any network, are you someone who's likely to, instantly sell your tokens as soon as you get them from staking? No, you usually hold them. So even inflation by design actually isn't a typical inflation model. Yes, it does scare some degens. Yes, people who don't understand this, which is most of the market, ultimately end up going, oh, there's 10% inflation, that's bad. But actually, it's not going to impact the price at all. At all. A project could have 100% inflation. If they didn't tell you about that and they never actually updated the tokenomics on CoinMarketCap or whatever, okay, they didn't update any of this sort of stuff, and you didn't know about it, actually price wouldn't change at all. It wouldn't change at all, okay? You have to actually have someone actively selling the tokens to impact the price. This is why it's important to have a look down here at the markets. You can see the markets all have different prices depending on each exchange, and it's the actual volume or the depth itself, the plus 2% and minus depth, that actually impacts the price. For me, for example, if I wanted to move the market up 2%, so move the price up 2% on one of the Binance pairs here, I'd have to put in about $438,000. This would increase by 2%, which may impact the overall price. Okay, so you have to understand these things aren't as black and white as what it makes it out to be. Another thing I do disagree with Miles about is FDV, and same with Ran. A lot of these influencers talk about FDV in terms of this is the be-all and end-all. I want to say, guys, FDV, this little number over here, is complete and utter BS. Means nothing. I'll tell you why, okay? FDV takes into consideration the entire supply. So this is Wormhole's chart again. Maybe I'll show you over here again just so it's easier on the eyeballs. This is Wormhole's vesting. This is all 10 billion tokens. Unlocks after what's at month 56, so many, many years down the line. Now, if you're someone who takes into consideration FDV, what you're essentially saying is, I want to know what the market cap theoretically will have to be at, month whatever, 57, which is like year 6 or 7 or whatever it is, okay? Why are you trying to work that out when you're only going to be selling the token over here, okay? So it doesn't make any sense to consider this when all we're trying to do is consider when we're selling over here. So I want to show you what this actually kind of looks like in terms of chart, basically, right? So this is Wormhole's chart here. Now, they also talk about investors and, how investors are, killing these projects with these, high FDV rounds. It doesn't matter at all. Like Wormhole doesn't matter. Like, these investors got in at a $2.5 billion FDV, all right? And they raised $225 million, which means if you do the math, right, at 1.8 billion tokens in circulation, they got in at a 450 mil market cap, which is only 41% lower than what we are. Well, actually, it's not 41% lower. We're 41% higher right now. They're about 30% lower in terms of when they bought in than us. But again, they have a huge unlock to still come out. They have to wait all of this time to get usually all of their tokens. We don't. So I don't understand why this impacts us at all. Right now, the market cap for Wormhole is at 650 million, okay, at a $3.5 billion FDV. Again, I'm showing you the FDV here because all that's changed from when these guys got in, okay, and here isn't the amount of tokens in circulation. All right, it's still 1.8 billion. It's the token price. Because the token price has increased, of course, the FDV is going to increase because that's telling us, well, for us to maintain the current price of 35 cents, there's going to have to be $3.5 billion invested in it in the next 7 years. Why is that important for right now? Why is that important for us when we are basically going to be selling the token over here in, early 2025 maybe? Okay, the FDV at this point will be 70 billion. be about 5.7 billion tokens in circulation. Okay, again, remember, we're looking at over here-ish. Okay, and basically the price being around $7, let's just say. So, like, the market cap being about 40 billion rather. So I don't really understand why it's such an important thing to worry about what wormhole's looking like way out here. Well, actually, matter of fact, what wormhole we're looking at way out here, we're only concerned with what's it going to be like in the next 12 to 18 months, 15 months maybe. Okay, so don't be confused, don't be rattled by the idea of FDV. Okay, and these unlocks themselves, they aren't all bad, guys. Like these unlocks, like we see with Pith here, right? All right, Pith on the day before the unlock, 2 days before the unlock, dumped from retail being scared. Maybe even investors intentionally dumped it so they could buy in cheaper. On the day of the unlock, right, Pith actually over 2x its supply, 2.5 times its supply. And I called this. And those of you who know the channel, I told you it would dump before because of the fear from retail, and then it would be bought up again. Right now, of course, it recovered. Then the market, crashed it again because it was the market sentiment in general. But on the day, it pumped well and truly where it was 2 days prior. So this is what I'm sort of saying, why it's very important you understand that vesting, these big unlocks, aren't a bad thing. Okay, investors inherently aren't going to tank the price when they receive their tokens. And it matters who these tokens are being delivered to. And FDV is a load of nonsense. It's a load of baloney. You shouldn't do necessarily fully diluted value, but you should look at the diluted value at the time when you're going to be selling, okay? Because that is the diluted price that actually would be somewhat concerning. But inherently, it doesn't matter anyway, because inflation is a complete load of nonsense. Inflation doesn't actually exist in crypto if you understand, again, what I just told you, okay? Now, so all in all, has this killed altcoins? Well, no. I think most people are focused within the top 1,000 altcoins. There's only going to be 1,000 altcoins in the top 1,000 altcoins. Have investors killed crypto? No. Have these low float, long vesting schedules kill crypto? No, because I think the argument to be made that projects should start at a high float, like maybe 50% of tokens in circulation, unlocked over a shorter time frame, could even be worse. Okay? It actually benefits us. This benefits us as long as the investors aren't having all of their tokens unlocked at once, like Optimism, for example, like Celestia. That's a different story, and I can tell you how to optimize that, of course, if you're subscribed, like I've done many times before. So altcoins screwed? No. Then are we doomed? No. All right, that's just my 2 cents on the topic. But I'd like to know your thoughts down below, what you think about all this. Anything can change. But I hope, if anything, you've learned something from today's video. And if you have, drop down there, hit the subscribe button, guys, and I will talk to you very, very soon. Take care. Bye.